Okay, now I'm set. Good afternoon, ladies and gentlemen. I'm back with another market review and outlook. We're going to begin by discussing and analyzing what gold has been doing and what it's likely to do next. So as you can see from this chart here, I have divided my chart into what we call IPDA data ranges. And IPDA data ranges, for those who do not understand what that means, it's what ICT calls the interbank price delivery algorithm data range, meaning this is the extent to which IPDA, the algo that is responsible for pricing these markets, is likely to refer to. And usually the algorithm will first of all refer to the immediate arrays within the past 20 days, and both arrays and liquidity points. And if it doesn't find anything, then it will refer to the past 40 days. And if it doesn't find anything, then it will refer to the past 60 days. So with that in mind, we can see that from the past 20 days, using this most significant high and most significant low, we have this range that we are currently working with. And in this range, we realize that price had a significant drop lower, which ended up taking out all this liquidity that was resting down here, as you can see. And right now we are in the discount of that range, and so far what we have done is we have shown a willingness to close above the discount market equilibrium, which is this 25% here. We have managed to show willingness to close above that. And now what is it likely to do next? What it's likely to do next is either of two things. Number one, the most likely move is for this market to continue moving higher. And what will validate that move higher will be a solid close above this swing high here. If we have a solid close above this swing high, that will indicate that we have broken structure to the upside on the daily time frame. And once we have that, then it will be logical for us to anticipate the market to seek a measure of internal range liquidity or fair value, and that most likely will be this daily sell-side imbalance, buy-side inefficiency here, or a bearish fair value gap in layman's terms. So with that in mind, it's also prudent for us to look at what silver is doing in order to validate whether that move for gold is solid or not. So as far as silver is concerned, it also had a significant drop lower, taking out the external range liquidity here. And right now, just like in gold, we see that we have managed to just close above the discount market equilibrium, this 25% here, but there is no significant SMT divergence. That is, we haven't seen any SMT divergence between the two pairs. And so with that in mind, it will be prudent for us to just wait for market structure break to the upside. And once that happens, then we'll have a more solid confirmation. Since we don't have SMT on our side right now, we'll have a more solid confirmation that gold is likely to push a little bit higher to seek fair value. Since we've had such a significant drop downwards, it's usually prudent for us to trade in the direction of the trend. The trend has been going lower for sure, that's true. But now, since we are in a discount market, it's prudent for us to demand such things such as market structure break if we want to call for a measure of retracement. I'm not saying that gold has made its low. It wouldn't be wise of me to do that, because it's usually very hard to pick tops and bottoms in markets. It's better for you to just trade with the trend, or if you are trying to trade against it, then instead of trying to catch a reversal, then it's better for you to predict a measure of a retracement instead, because after this significant drop lower, the only time I will personally begin to engage buys in this market is after I've seen a structure break above this high. After seeing a structure break above this high, if we see that today, then from tomorrow I'll be interested in seeing how we can continue going higher. Yes, so that's my 2 cents on what gold is likely to do. And if we might maybe just take a look at what it has done today in terms of intraday movement. We realize that, let me bring this here. This is my Asia kill zone. We realized that a price had a normal protraction during London, and then we saw this displacement to the upside. This is that market structure point that we are looking at the daily. And so if we see price breaking above here today, then that will confirm that we are likely to continue having higher prices for the day. And how will we know that price, or rather how will we confirm that price is likely to do that today? For me personally, I'll be looking at this point here, this order block. This is a 1 hour order block. And why will I be looking at that specifically? Because as you can see, I've marked the London range, which begins from midnight New York to around 5 a.m. New York time. That's the London kill zone, not the session itself, but the kill zone. So that's the London kill zone. But now I'm interested in seeing the most significant range that was formed after London open. That is from midnight. That's from midnight New York to when New York session begins, which is 7 a.m. New York time, which is right there. So with that in mind, I can see that the most significant range that formed during that period was encapsulated by this swing high here and that swing low there. And within that range, the most significant discount array in this time frame I can see is this bullish order block here. So that's why I've marked the opening price of that order block right there. And now in the lower time frames, I'll be scouting to see whether price will have a willingness to find support at this level. And if price does that, then I'll be sure that both these highs and probably this one as well might be challenged today. So that's my 2 cents on gold. I personally won't be trading that move, because what I'm waiting for is that higher time frame confirmation. Once we have this higher time frame confirmation whereby we break structure above this high, then and only then will I be sure that price is most likely going to continue going higher for the rest of the week. But until I see that, then we're probably gonna still be seeing lower prices. And a big pointer towards us seeing lower prices will be a failure to close above that high. If price fails to close above this high and we just see a more like a liquidity sweep above it, which will be which the telltale sign for that will be like a weak closure. That is not a body closure above this high, but a weak closure. And us seeing today in the lower time frame this area giving away to price, then for the rest of the week we shall anticipate lower prices. So that's how I'm looking at gold right now. And now I'm also interested in another pair this week, which I've never talked about before, and it's oil. So for oil, given all the macro political events going on, like the war in Iran that the US and the Israeli forces have ganged up together to partake, it has really affected the oil market. And as you can see from the past 60 days, we've seen a consistent rise in oil prices. And I'm still bullish on that market, because so far in terms of market structure, even from the past 20 days alone, we have seen price posting consistent higher highs and higher lows. So I'm not about to begin to fight that trend. I anticipate it to continue going higher and possibly challenge this high. However, in order for me to comfortably engage in this market, there are two things I'm looking at. Number one, there's this daily fair value gap here, and then there's this premium market equilibrium here. So if price drops today, then I will not want to see this area being challenged, because there's a lot of confluence here. We have this fair value gap here, and then we also have this breaker here, that last bullish candle that was printed before we had this manipulation lower that took out all this liquidity that was resting here, and then we turned around and displaced, that is formed a fair value gap at almost the same, not even almost, but at the same area. We formed a fair value gap there and also broke structure to the upside. So if we're going to see any retracement, then I will anticipate this area to hold a lot of water as far as supporting higher prices is concerned. At the same time, I'm watching this premium market EQ to gauge whether we are going to see that retracement or not. And that's where I'm going to drop now to the lower time frame and talk about what I anticipate for today's delivery. So this is that premium market equilibrium that was on the daily here, this one here, this level here. This is the premium market. This is the whole range. This is the midpoint of the range. So above is premium, below is discount. And now in the premium market as well, I've divided that range into two, having now the premium market equilibrium, and below the equilibrium of the range, I've divided also the discount market into two in order to arrive at the discount market equilibrium. And maybe if you would want to have your fib like that, those are my settings. When I want to grade ranges and grade PD arrays, that's how I usually set up my fib. I only mark this one and this one, and then I introduce 0.5, 0.75 and 0.25. That's how you go about it. Okay, so with that in mind, let's now go to the 1 hour time frame and study how today's delivery happened. So during Asia, we saw price having a little bit of trouble, closing above the premium market EQ, and hence that's why we saw price having this drop lower during Asia. And then during London, we had a bit of a consolidation, and then later on, as we went into the close of the London session, not session, but rather the London kill zone at 5 a.m. New York time, we saw this parabolic move higher that also found resistance here inside this fair value gap that was formed during Asia. So now currently, if we study the London range from now midnight New York all the way to 7 a.m. When New York begins, we use the most significant swing high and the most significant swing low. We realize that if we are continue to go higher, then that means we will have to challenge this order block here, this bearish order block here. However, if we fail to challenge that, as you can see already, we found a measure of rejection from that order block here, and right now we are just hovering around the premium of this range. So if we are to continue going lower for the day, and hence have that retracement that I was talking about, then we should see this order block holding and price not even coming close to this area here. If we see that, then we are likely to continue seeing that retracement and all these liquidity points challenged, and then find support again within this area here. This is that area I mentioned that has a lot of confluence from the higher time frame. Yes, and however, if we fail to do that, and how will we know that we have failed? Let's drop to an even lower time frame. You can use the M15 now, yeah. How will we know that that retracement is unlikely going to happen? The first telltale sign will be a close above this swing high, a solid close above it, not a weak but a solid close above it. If we see a solid close above this, then we are likely going to challenge this high and maybe this high. But if we fail and form another lower high, then in this time frame, that is the M15 time frame, then that will mean that we have shown respect for this propulsion block here. A propulsion block is an order block that follows the main one. You see, there was this main order block here, this 3 series of candles that released price lower, and then we had this retracement that formed another block. Now this is usually called a propulsion block. If we respect this propulsion block and we don't see price having solid closes above it, then for sure we will see a drop down and we will have that retracement that will take us into that higher time frame area where we are likely to see further buying pressure. So that's how I'm looking at oil right now. I'm obviously very, very bullish on it. I want to see that high broken since from the past 20, 40, and 60 days in terms of IPTA data ranges. We've seen very, very bullish price action, price posting higher highs and higher lows. And I'm not about to start calling the top of the oil market, since even the war that's going on we still don't know when it's going to end. The macro political environment is very, very uncertain at the moment, so which means it's only prudent for us to expect higher prices. However, at the same time, as you can see, we had these straight how many 1, 2, 3, 4 days of straight buying price action from last week. So it's only logical for us to expect a measure of retracement. And I've told you now, in order for that retracement to manifest, number one, from the 1 hour time frame, we should respect that order block. Number two, in the M15 time frame, we should see this propulsion block that was formed after this order block being respected. If those two conditions hold on both the 1 hour and the M15, then for sure we will see that retracement lower that will take us to this higher time frame area of confluence down here. So that's how I'm looking at those two markets today. Those are the two markets I'm interested in this week. And once both of those criteria are met, I'll be looking to buy oil and also to buy gold, or maybe sell gold and buy oil. I don't know. It depends on how those conditions I've laid out will be met. And that will be all from me today. I will come back with another review once we see how these conditions that I've talked about have been met. And with that, I would like to wish you all a lovely evening and also good luck and good trading.